What's up, guys? So I usually get this question where people say, well, Maro, how much does it cost for me to invest on the Zimbabwe Stock Exchange? They want to know, on top of the money they are investing, how much more money is involved in other costs. The short answer is that it will cost you 1.693% of your money if you're buying shares, and it will cost you 2.443% of your money if you're selling shares. We'll break this down in this video, and we'll also look at how much it costs for fixed income, which is something that's not really prevalent on the Zimbabwe Stock Exchange, but something that you might want to take a look at as the market develops in future. Now, to start with, it's the buying that most people are interested in. Most people are new investors who have not been on the market before. They really want to know, look, I have $100. How much of this money on top do I need for me to be able to complete a transaction? If, for example, I was buying something that's 100 shares of a company that was going for $1 per share. So here's what happens. As I said at the start of this video, the total cost for buying is 1.693%, but I'm going to break it down for you. So the first cost, of course, that you encounter is that you have to pay your broker. As you see, this market that we have of shares, if you want to buy shares of Econet, if you want to buy 100 shares of Econet, you don't know who is selling 100 shares of Econet, but there are people who know. These people are called brokers, and they are employed to be intermediaries between buyers and sellers. So what you do is, once you have a stockbroking account, you pick up your phone, you call your broker and say, look, I need 100 shares of Econet or 100 shares of Delta right now. I need them at 1.693. You can state your price, or you can tell them I need them at the market price, which means that at whatever price you get them, I'm willing to buy them. That's really if you're desperate and you really want these shares so bad. So your broker then says, well, I'm going to start calling people. Your broker already knows, because they're in the business. They know who has shares of Econet, and they also know other brokers who might have their clients who have shares of Econet that they're selling. So they ring up a couple of phones. Of course, in the modern world, and even on the Zimbabwe Stock Exchange, they put your order on the board, which is electronic, and then the sellers begin to see if you're offering at 1.693, but they are only selling at they're only selling at 1.7, then nothing matches. But then if you say at market price, then whatever seller comes in at whatever price they are selling at, your broker then executes your transaction. For doing this, for connecting you to people who are selling, or if you are selling, for connecting you to people who want to buy your shares, brokers do earn a commission. And they don't determine how much they actually earn. This amount is already stated and is already legislated, and there are rules around this. The total amount they get from doing this for you is 0.92% of whatever transaction value you're having. Which means if you are buying shares worth $100, your broker is going to get 92 cents out of that. I hope my mathematics is right. They're going to get 92 cents out of that if you're buying shares worth $100. Now, the second thing you have to pay is VAT, or value added tax. This is a tax that's generally paid for most other things, including groceries that you purchase in the grocery stores wherever you're operating within the borders of Zimbabwe. And this value added tax is 15% off brokerage. So it's 15% of whatever you pay to your broker. According to the calculations I see, it's about 0.138%. So you've paid 92 cents to your broker. Now you're paying 13.8 cents. 13.8 cents. You're paying that as a value added tax. Of course, that money goes to the Zimbabwe Revenue Authority. The third thing that you have to pay is the Central Securities Depository Levy, which is 0.1% or 0.10%, depending on how you read these things. The Central Securities Depository Levy is essentially money that goes to where your shares are kept. So in the past, before shares were sort of electronized, or before it was existing all in electronic paper and the transfer of shares was electronic and seamless, what used to happen is that if you bought 100 shares of Econet, you would actually have a delivery of 100 certificates of shares. Well, you can imagine so many things went wrong using this system. Your certificates could be burnt in a fire, and it would be very difficult for you to go and really prove that you own these shares and everything else. They could be stolen by some other people. So many things could happen. Of course, those who had money, they kept these in a safe place, in a safe, in a bank or something like that. But it's a very cumbersome process. If you buy shares, you want them to be delivered in as shortest of a period as possible. And so because of this, now we have an electronic way where if you buy shares from me today, within 2 days, they would have been credited to your account electronically. There is no actually movement of physical pieces of paper that are called shares. It's now all electronic. It's technology. I'm sure you would understand, as many things are now electronic. So to these people who are responsible for making sure that the shares are actually kept in the right names, and the right owner of the shares is given their due ownership of the shares at any particular time, they are the Central Securities Depository, which is in Zimbabwe is called the ZSE Depository Company, if I'm not mistaken. And these people, you also have to pay them because now they are keeping part of your shares. And so for doing this, for what they are doing, which is transferring the names of the shares from the old owner to your new owner, you pay them 0.1% of your money. Now, the next thing, the fourth thing that you have to pay is stamp duty. Yes, some of these things are very interesting, a little bit old and archaic. I tried to do a little bit of research and I figured out that in the past, when you made any transactions, and I'm talking about in the real past, there had to be a stamp that had to be put there by the authority in charge, whether this is the Queen of England, whether this is, at that point, the King Lobengula, or I'm not really sure whether King Lobengula was, charging people any stamp duty for transactions in his kingdom. But I would assume there were taxes of some sort which had to be put by the authority to stamp that this is, it's a true transaction. It's not feja or anything. And so to those who might want to read more about the stamp duty which you pay, which is 0.25%, it goes to the Zimbabwe Revenue Authority. It's not just for transfer of shares. Of course, if you buy real estate, I think, and if you buy many other immovable or movable properties within the borders of Zimbabwe, you also have to pay stamp duty. But for the purposes of us buying shares, it's 0.25%. And if you want to learn more about it, you can go and read the Stamp Duties Act, Chapter 23(9). It's something for those who might want to geek out and read about this. After you're done with the stamp duty, the next tax you have to pay is the Zimbabwe Stock Exchange Levy. As we all know, the Zimbabwe Stock Exchange is the central facility. Of course, it has a physical presence, I think, in Highlands, Zimbabwe, in Harare. But of course, it's also a central electronic and available on the web platform which brings together stockbrokers, it brings together investors. They make sure that we can actually have the buying and selling of shares. And the Zimbabwe Stock Exchange has to be compensated for taking what they are doing, which is taking part in bringing up the marketplace, establishing the rules, protecting investors, and you have to pay the Zimbabwe Stock Exchange 0.1% of the money that you are investing, which means 10 cents for every $100 investments that you make. After you pay the Zimbabwe Stock Exchange, you also have to pay the people who regulate the Zimbabwe Stock Exchange, or rather the entity that regulates the Zimbabwe Stock Exchange. This entity is called the Securities and Exchange Commission of Zimbabwe, and you have to pay them 0.16% of whatever money that you're buying, which means 16 cents on every $100. Investor Protection Levy is the last tax that you have to pay. This is the smallest of the taxes. It's 0.025% of your money that you have to pay. So it's almost about 2.5 cents of the money that you need to live out when you buy. The Investor Protection Levy is essentially a fund that is created that would compensate investors in the event that one of the capital markets players go broke for some reason. Of course, you can have a situation where it's just discovered that maybe, I don't know, a company which is listed on the Zimbabwe Stock Exchange, which is called Maro Holdings, for the past 10 years has been cooking its books, telling people that it has been having profits, and it actually has not been having profits. Big companies have been, to use a word that's liked by the Zimbabwean press, fingered in some of these interesting schemes. I think there is a case of Enron in the United States and other big players that were actually caught cooking their books, their accounting books, and lying to investors they were making money. So when these things happen, there is a fund that would compensate a little bit of money for the investors that they had put, because it lies in the purview of the regulators who have failed to fully regulate these companies and make sure that they were actually telling investors the truth. But of course, the Investor Protection Levy is there, which sums up everything to 1.693% of your money. So if you're going to buy shares worth $100, for the process of buying these shares, you're going to leave on the table about $1.69. Now, going to the selling, what happens when you sell shares? When you sell shares, the broker's commission is the same, it's 0.92. The VAT is the same, it's 0.138%. The CSD levy is the same, it's 0.10. Stamp duty, you actually do not pay stamp duty when you sell any shares in Zimbabwe. What happens is the buyer who you're selling to is the one who pays the stamp duty. Zimbabwe Stock Exchange levy remains the same at 0.1%. The Securities and Exchange Commission levy remains the same at 0.16%. The Investor Protection Levy remains the same at 0.025. And then, of course, there is one more tax which gets added when you are selling, and this is called the capital gains tax. Well, the idea behind the capital gains tax is that, look, you bought Econet at $2 per share and you sold it at $5 per share, which means your capital has had a gain. You have had gains in your capital. And of course, the taxmen, who in this case is the Zimbabwe Revenue Authority, are saying, well, this capital you deployed in Zimbabwe, whether you are a citizen or whether you are a foreign investor, has grown, and you have reaped these gains, which is $3 per share of whatever you had, and we're going to take some of that money and we're going to keep it for ourselves for the purpose of taxation. And the capital gains tax is 1%, which means if you sell shares at $100, you have to leave $1 on the table that goes to the Zimbabwe Revenue Authority for capital gains tax. This makes the total for selling your shares to be 2.443%. As you can see from this, it means that if you buy, you only pay 1.693, but if you sell, you pay 2.443. Of course, they're trying to discourage you from selling. They want you to keep and hold your investments for long, so that, of course, it's good that you're deploying your capital, and you have to be penalized for, selling your investments and taking up your capital. It's an interesting discussion. Now, just the last part of this video is I'm just going to talk briefly about fixed income. We don't really have big fixed income markets. Our companies don't raise money by bonds as much as I'm informed at this time. It's only the government that's involved in buying and selling of treasury bills or some short-term bonds of some sort. But for fixed income, the costs are actually lower than the costs that are there of equities. Of course, the returns in fixed income are also lower. The broker's commission is 0.065 if you're buying fixed income securities. VAT will then become 15% of that, which is 0.00975%. CSD levy 0.01. ZSE levy 0.12. 0.012, sorry, for the Zimbabwe Stock Exchange levy. And then the Securities and Exchange Commission of Zimbabwe levy is 0.01. And then Investor Protection Levy is 0.003. That makes the total of buying shares, that makes the total of buying fixed income to be 0.10975, which is substantially lower compared to the 1.693 that you need if you're buying equities or if you're buying shares. If you're selling fixed income instruments, the costs, of course, are also lower. The broker's commission is the same, 0.065. VAT is the same at 15% of that. CSD levy is also the same at 0.01. ZSE levy, the same at 0.012. Securities and Exchange Commission of Zimbabwe levy is the same at 0.01. Investor Protection Levy, the same at 0.003. And the total is the same for buying and selling of fixed income. This total is 0.10975%. So this is just a broad overview of the costs that are involved in buying and selling. So just to recap, when you are buying shares on the Zimbabwe Stock Exchange, your total costs are 1.693%, which means that if you buy shares worth $100, you are leaving $1.69 on the table that goes to various entities that make sure that the stock exchange and the capital markets are regulated and are functioning properly. If you are selling, the costs are a little bit higher. You leave $2.44 on the table for every $100 that you sell of securities. Of course, most people, when they sell, they would have realized a little bit of capital gains. Your money would have grown, and so it shouldn't really be a pain if you have had some growth to leave $2.44 on the table. But this just has to happen. It's the laws. Nobody can reduce these things. When you're buying fixed income, the cost is 0.10975%, and this cost is the same as when you're selling fixed income. Of course, if there is any part of this video that's not clear, something that I said that I rambled over that you don't really understand, and you still have questions about costs of investing on the Zimbabwe Stock Exchange or costs of participating in Zimbabwe's capital markets, then do let me know in the comments below, and I'll definitely answer your questions. And until next time, my name is Maro.